push the record button, but we have going ahead and going to start recording the session, and I'm going to share my screen and we will begin our program. So stay tuned. All right. So welcome again, everyone, to our Endow, Kentucky informational session. I'm going to spend the first 10 minutes or so of our program giving some background and a general overview of how the program works. And then my colleague Jennifer is going to get into more of the details of how the Endow Kentucky gift that you make can be used and how you can take advantage of this really unique program to support your favorite causes. Before we actually get into the content, I do need to go over a legal disclaimer. So a word about tax and financial planning advice. The information we're presenting here today is meant to familiarize you with the Endow Kentucky program and process. This is not tax, financial, or legal advice. And as always, we encourage you to consult your own professional financial advisors to decide if this tax credit program is right for you and how it may affect your personal finances. So with that, I'm going to go ahead and get into our tax credit program. So first, I want to give a little bit of background about this tax credit program. It was created by the Kentucky legislators in 2010. You can find the actual language of the statute in KRS 141.438. And basically, this statute allows for Kentucky taxpayers to get a tax credit of up to $10,000 if they make a gift to a permanent endowment fund at a qualified community foundation. Now, this credit is in addition to the charitable deduction that you can receive. So you're getting a tax credit and a charitable deduction. So it's really a great program. But remember, as I said, this credit only applies to gifts made to permanently endowed funds at qualified community foundations. So you're not eligible for this credit if you make a gift directly to a charity, or if you make a gift to a fund that's not permanently endowed. It has to have both of those pieces, only gifts to community foundations and only gifts made to permanent endowment funds. When Kentucky established this in 2010, we were following other states that had a program like this. Montana was actually the leader in this field across the country. They were the first state to enact a program like this. I think it's been over 20 years now. And there are really only a handful of states that have a program like this. There's only about 5 across the country. So we really are lucky that this is available for generous individuals here in Kentucky. The goal of the tax credit program was to build wealth in all of Kentucky's communities, but especially in our rural communities, to ensure that these areas have a source of income to help support their citizens' quality of life both now and for future generations. That's why the legislators really wanted to limit the program only to permanent endowment funds so that this income would be around ideally forever and ever for future generations. When the program was started back in 2010, the legislator initially set aside only $500,000, $500,000 for credits every year. But in 2016, they increased this amount to $1 million. So that is the credits available. It's a $1 million pool of credits available each year. The Endow Kentucky program has been hugely successful over the last 11 years. All of the community foundations across Kentucky participate, and there are about 9 community foundations across the state. And all of these community foundations market this program as much as they can to their donors. At the community foundation alone, we've received over $12 million in Endow Kentucky gifts over these last 11 years. These gifts have helped to create over 100 permanently endowed funds that support nonprofits throughout Kentucky. Now, Jennifer is going to talk a little bit more later about some of these and some examples of these types of funds, but they can range from scholarship funds to support students graduating from a particular school or county, to a fund that supports someone's local church. So the great thing about establishing a fund at a community foundation is it really can support whatever charity or causes you care about. And for this program, as long as it's permanently endowed, there really are so many options for you as a donor to take advantage of this program and support the causes or nonprofits that you care about the most. And then lastly, this program is in real high demand, another indicator of its success. So as I mentioned earlier, there are $1 million in credits available each year, and this $1 million is used up every year, usually on the first day the Revenue Department starts accepting Endow Kentucky applications, which is July 1st. Now we're going to talk more in a minute about this application process and the deadlines and how everything works, but it's important to keep in mind that these credits are almost always exhausted really quickly once that deadline starts getting underway. Now I'm going to talk a little bit about the exact requirements of the program and how it works a little bit in more detail. So first, you have to be a Kentucky taxpayer to be eligible for this credit. You have to be paying Kentucky income taxes. So if you live in Florida most of the year and don't pay any Kentucky income taxes, this tax credit's not really going to help you very much. Keep in mind, as a taxpayer, you can be an individual and a company. So as long as you're paying taxes, whether you're an individual or a business, this tax credit can be helpful for you. Also, both individuals of a married couple can participate in this tax credit program. I'll mention the minimum amount again later, but each individual is eligible, of a married couple is eligible for this $10,000 tax credit. So as a couple, you could receive a total of $20,000 in tax credits. Now, as I mentioned earlier, to be eligible for the credit, you have to be making a gift to a permanent endowment fund at a qualified community foundation. Permanently endowed funds are typically invested for long-term growth, and they only distribute a small portion of the fund balance each year to the nonprofit or the cause that they're meant to support. Again, the point of these funds and the thing the legislators really wanted to do was provide a steady and predictable stream of income forever to these Kentucky charities and causes. The endowment funds do have to be held at a community foundation. This was another part of the statute. The Kentucky Department of Revenue recognized that community foundations really are uniquely positioned to handle and manage endowment funds, and that community foundations have a history of longevity to ensure that endowment funds receiving these gifts continue in perpetuity. So that's why they really specified and limited these gifts only to community foundations. Now, the tax credit that's available is always 20% of your gift, and the maximum credit available for individuals is $10,000. As I mentioned, both individuals of a married couple could get that $10,000 credit, making the credit total as a couple $20,000. Now, because the maximum credit is $10,000, what that basically means is the maximum gift you can really make is $50,000. If you make a $50,000 gift, 20% of that would get you that $10,000 credit. Now, there's no minimum gift to make. You can make as small of a gift as you want. However, remember that the credit is only 20% of your gift. So if you're making a gift of $100, you're only going to get a $20 tax credit. So at some point, you may just want to ask yourself, is it worth it to go through the application process for only a $20 credit? But there is technically no minimum. And then the last point I want to make here is you have to receive an approval letter before you make your gift. This is not the type of tax credit where you can just make your gift anytime without following a process and be eligible to get the credit. There is a process, and you have to get approval for your gift before you make it. So I've got a few more points before I hand it over to Jennifer, and that is the tax treatment. So First, you get the tax credit in the year that you make the gift. Now, if you can't use the whole credit that you received, you can carry it forward for up to 5 years. But this credit is not refundable. We're not refundable. So if, let's say, you got a $10,000 tax credit, you used half of it this year, but you didn't have a use for it in any other year, you can't write to the revenue department and say, send me a $5,000 check. Doesn't work like that. It's not refundable, but you can carry it forward up to 5 years. Now, earlier I said that you can get the tax credit and the deduction, but I want to pause here and clarify something because this is really important and it has changed recently. So in June of 2019, the IRS issued a notice saying that state tax credits should be treated like a benefit because you're basically getting something in return for your gift. You're getting a tax credit. So what the IRS said is you need to reduce your federal deduction by the amount of the credit you received. Now in Kentucky, the Revenue Department hasn't issued anything public about how you should adjust your state return and your state deduction. But states generally follow federal guidelines, and our contact at the Revenue Department has specifically told us that Kentucky taxpayers should do the same thing that the IRS is recommending, meaning you should also reduce your deduction, your state deduction, by the amount of the credit you received. So even though the state hasn't issued anything publicly, that is what we're recommending. And the way this would work is, here's an example. So let's say you make an Endow Kentucky gift of $5,000. 20% of that would be $1,000. So that gift would make you eligible for a $1,000 tax credit. Now, pre-2019, you could claim a $5,000 deduction and a $1,000 credit. But now that we have this notice from the IRS and a recommendation from the Revenue Department, your deduction really shouldn't be $5,000 anymore. You have to reduce it by what you got, by the benefit of the tax credit. So you're reducing your deduction by $1,000, leaving you with a deduction of $4,000. Now, even though this might make this credit slightly less appealing, the reality is it's still a great benefit because remember, a credit reduces your tax bill dollar for dollar, whereas a deduction just reduces your taxable income. So if you do owe income taxes to Kentucky for $5,000 and you got this tax credit for $1,000, all of a sudden your tax bill is down to $4,000. And if you made an even larger gift and had that maximum credit of $10,000, all of a sudden your tax bill is $0 and you have credits to carry forward. So it's still a great, great deal. But again, as I mentioned earlier, because the state hasn't issued any public recommendation for how to treat your taxes, with this recent change, we always encourage you to consult your CPA or your tax attorney when you're filing taxes to make sure that you're following all the rules and regulations as it applies to your taxes. Okay, so now I'm going to hand it over to Jennifer to talk a little bit more about how you can use your Endow Kentucky gift and some details about the application process.
Thank you, Heather. Hello, everybody. And first, I just want to say there are so many people on this call that I see that I wish we were in person. It's been a long time, and there are a lot of people out there that I wish we were having our donut and our cup of coffee and hugging each other hello. But I think we all think the light is at the end of the tunnel, and hopefully the next time we do this, we'll all be together. Okay, so I get the exciting part because I get to talk about the fun things you can do, the effective things you can do with Endow Kentucky gifts in your community and for the organizations that you care about. And there are lots of ways that donors can use these gifts, and all of the ways give the same tax benefits. They all provide the same long-term support for the organizations and the needs of the community because they're all permanently endowed. And that's at any gift level, whether it's $200 or $20,000. So we're going to look at all the various options, no matter what the level. We're going to start, though, with gifts of $25,000 or more. Donors can create permanently endowed funds that that support specific causes that are important to them. And we have a number of them. Heather mentioned a number of them. Probably the one that could have been designed for Endow Kentucky are designated funds. Designated funds are funds that you create that support one or more named nonprofit organizations. So you can create a fund in your family's name. It's the Smith Family Charitable Fund, and every year it's going to make distributions to your 3 or 4 or 5 favorite nonprofits in perpetuity, and that's a designated fund. You could also choose, though, to create a designated fund that benefits a single nonprofit, and you could still do that in your name, or you might choose to create the fund in the name of the nonprofit. So then it could be the Friends of the Opera or the Friends of the Humane Society, or something that lets others know what the purpose of the fund is, and it creates a vehicle for other patrons to contribute and also help grow the endowment of the organization. We also offer field of interest funds. These funds support an area of concern or of interest rather than a specific organization. And what they do is ask the community foundation to, over time, identify the organizations each year that are doing work in this area of concern, whether it's education or animal welfare or conservation, whatever it is. Find the organizations that are doing work in this field and make the distributions to those organizations every year in perpetuity. We also offer donor advised funds, which pretty much those are the ones that everybody knows about. They're so popular because they're so easy to use. They let you support as many nonprofits as you want, whenever you want, with grants at your direction, whenever it's convenient for you. Now, when donor advised funds are permanently endowed, then they become eligible to receive Endow Kentucky gifts. And they have the added advantage of letting you involve multiple generations of your family. And that can help to pass on philanthropic values. So donor advised funds can also be used in this context. Heather also mentioned scholarship funds, and scholarship funds are wonderful vehicles for Endow Kentucky gifts. They require $50,000 to establish, and they're highly customizable. You can make them to benefit certain demographic groups, certain geographic areas, certain areas of study. They're wonderful. They're wonderful ways to help the community. We have over 100 scholarship funds at the Community Foundation. The key with all of these is that they must be permanently endowed. Otherwise, they don't qualify to receive an Endow Kentucky gift. Now, the second circle you see on this slide, this is the second and the third. Both of these can receive gifts at any amount. There's no minimum that can be given to these. It's anything that you want. The second one refers to the Fund for Louisville. The Fund for Louisville is a competitive grant-making fund, and it addresses the changing needs in Louisville over time. And similarly, there are endowment funds for our 5 affiliate community foundations out in the state. And those endowment funds are eligible to receive Endow Kentucky contributions as well. And that provides more resources for them to address changing needs over time too. Finally, you can use your Endow Kentucky gift to add to an existing endowment fund. And that's a gift of any size. And Heather will go to the next slide. You can see this is just a partial listing of nonprofit organizations for whom there are existing endowment funds at the Community Foundation, and they can all receive Endow Kentucky gifts. This is what I was referring to in the beginning about designated funds being perfectly positioned for Endow Kentucky. That is what these are. These are funds that are created to benefit a specific nonprofit. And we collect these on a list, and each spring, we send Endow Kentucky information to everyone that has participated in the past or anyone that has indicated they would like to participate. And included in that information is a current application, a letter that gives some directions about how the process works, and a list of current endowment funds, existing endowment funds that they might choose to direct their Endow Kentucky gift to. And this is just a small number. There are so many different designated funds. They reflect what's important to so many different donors. That's why there's a great number of them. To the extent that the donors would like us to and allow us to, we publicize the name of their fund like this, and we include it in the list that we send to everybody in the spring. And this helps the fund to grow, and it furthers the philanthropic goals of the donors who are all supporting the same organization. Our current list is really running, I think, 3 pages long at this time, but this little sampling shows you the types of organizations that you'll see that have endowment funds. There's organizations that benefit animal welfare, churches, education, healthcare, pretty much anything you can think of. It's every aspect of a thriving, vibrant community, and that's really what Endow Kentucky was trying to do. So, and of course, if you create a new fund, a new designated fund, we can add it to this list also, and then it can grow over the years as well. All right, let's look now at the process for making a gift. And this slide is deceptively simple. It looks like you send in an application, you get approval, and you make a gift. And it doesn't work like that at all, really. It does work like that. It's just a lot more detailed. So the first step is the application. It's a simple application. We'll look at it in a minute. The taxpayer provides basic information about themselves. They specify the amount of gift that they would like to make and the community foundation they want to make it to. If donors will provide us with that application by June 29th, 2021, that's going to be a Tuesday this year, we will collect all of these. We scan them and we email them to the Department of Revenue on the first day that they accept applications, because as Heather mentioned, this is sort of a first come, first serve program. So we send it all to the Department of Revenue on July 1st. This year, July 1st is on a Thursday. Other years, it's just on the first working day following July 1st. So it'll be on Thursday, July 1st. We submit them all, and then everybody just has to wait. And that sounds like it's real simple, but it's really not. People who have done this before know that there are a couple of can't miss deadlines. And as July gets closer, we get a lot of calls from folks saying, is there anything else I can do? Do you need anything else? What's the status? And we're always happy to hear from you and happy to give status. But in reality, there's nothing that can be done to accelerate or speed the process along until we get to this second step. And that's the second block you see there. The Department of Revenue, in usually about mid-July, sometimes it's a little later in July, but usually mid-July, they send out the preliminary approval letters. These letters tell the taxpayer how much of the gift that they propose to make has been approved for the state tax credit. This is a triggering event. Only after the date of this letter, but within 30 days, can the donor make their gift to the community foundation. It has to be completed in that window. The gift can be by check, it can be stock, it can even be a qualified charitable distribution, but it has to occur after the date of the letter and within 30 days, or it will not qualify for Endow Kentucky. So sometimes we have people that are extremely organized and they will send in their application and their check all at once and they have checked their box, but we can't use that check. So you have to wait until the date of the preliminary approval letter. That check has to be after that date, or we have to ask for a new check. If it predates that letter, it cannot be used. Do be aware, if you're going to make your gift by stock or by a transfer from your IRA, that too has to happen within the 30-day window. So it's a really good idea to get in touch with your broker or give your IRA administrator the heads up that this transfer is going to happen mid to late July, and it's on a deadline. It's going to need to happen fairly quickly. We can provide transfer instructions or any information they need. Just let us know. It's a good idea to give them the heads up on that. And I'll give one asterisk on qualified charitable distributions from your IRA. If that's what you're thinking about using, please let us know as soon as you can, because there are some additional requirements, restrictions on that, and the tax treatment is a little bit different. So we would want to talk through that with you and make sure that's still what you would like to use, given that there's some different rules there. And we could talk about it later in this webinar if you all would like to, whichever, give us a call. So then the final thing that happens is you make the gift. There's step 3. So that gets us through the process, but steps 1 and 2, let's look at in a little more detail. So let's look at the application. And this is way too little. I don't expect you to be able to read this, but it shows how simple it is. It's just a single page with very basic, limited information that's required, which is really nice. So at the top, it's just the name of the taxpayer. If you're an individual, it's going to require your Social Security number. If you're a company, it's going to be your tax ID number. It's going to have the amount of the gift that you want to make, which, as we have said, The maximum is $50,000. So in the little space right next to it that says the amount of tax credit, it's going to be 20% of the amount of the gift you want to make. So the maximum that could be is $10,000. And I know I'm repeating many things that Heather said, but there's so many deadlines and restrictions that if you repeat them enough, it all kind of gets through. So there's a lot to remember about this program. So the maximum that's going to go in square F is 50,000, and the maximum in G is going to be 10,000. Although the amount in F could be $200. It's whatever you want it to be. Now, the next section
Jennifer,
down.
I had a question come in the chat box, and this would be a good time to address it. So I just want to jump in. The question was, can you make a larger gift than 50,000? And the answer is yes, you could. You could make a gift of 100,000 if you wanted to, but you're not going to get 20% of 100,000. The absolute most of a credit you can get is 10,000. So yes, you can make a 100,000 gift if you want to, but you're still only going to get a $10,000 tax credit. So recommending that the most you should give is 50 is only because the very most tax credit you can get, period, is 10. So even if you make a higher gift, you're not going to get 20% of 100,000. You're limited to 10. So I just want to throw that in because I thought it was a good time to answer it. Sorry to interrupt.
Yeah, absolutely. And I think, the reason why they put that maximum on there is because there's a fixed amount available in the pool for the tax credit. So, if it were unlimited, then it could be wiped out with just a handful of donations. And they really want it to be a program that spreads across the state. So in the next section down, you have to state the community foundation that you will be making the gift to. And when we send out the information, probably it'll be at the end of this month, mid to the end of this month, we will send you an application and we pre-fill as much of it as we can, the dates. And in this one, you'll see it's the Community Foundation of Louisville, our tax ID number, address, phone number. We put all of that in there for you. And as Heather also said earlier, if you're a married couple and you both want to participate, we're going to need 2 applications, and each of them can be for up to the maximum amount of $50,000, but 2 different applications. You don't do a married couple on one application. All right, so right under that, in J, you can state the name of the fund that you're going to want your gift to go to, but you don't have to fill that out for your application to be complete. You might still be deciding, maybe we're still figuring out the details of your fund agreement. That's what's going to tell us what you want us to do when you create this fund, but that will be ready in time for you to make your gift. And that's the point at which you need to know which fund you're going to be putting it into. So that'll be within 30 days of your preliminary approval letter, probably mid-August. Know where you're going to send it by then. You'll see that there are 2 signature lines there. The first one is mandatory. That one has to be signed for the application to be complete. That second signature line with the X by it, that allows the Department of Revenue to share with us information from your preliminary approval, the amount of the gift, but more importantly, the date of that letter. Because there's that hard and fast deadline of 30 days after preliminary approval within which you have to make your gift, that lets us follow up with you, follow up with people that intended to do this, and make sure that everybody who wants to participate makes that cutoff. All right, so now let's look at what preliminary approval is, because it sounds kind of funny to say you have to get approval to give money away, but that's not really what it is. What they're really doing is approving the amount of the gift. The Department of Revenue is approving the amount of the gift that they can give a state tax credit for. There's a fixed amount in this pool. It's $1 million. It's always oversubscribed. So the Department of Revenue is not normally able to give everybody approval for 20% of the gift they want to make for the state tax credit. Normally, they have to approve the credits on a pro rata basis. So that percentage over the years has varied. It's usually 70 or 80 something percent of the gift you have applied to make. Last year was an aberrant year in every possible way, and that includes Endow, Kentucky. The percentage was about 90%. And that just reflects the fact that fewer people were participating in the program last year. We expect that number will skew back towards the more traditional 70s, 80s, but you never know. It just depends on how many people participate each year. So let's look at an example. So you can, it really puts this preliminary approval into focus here. And let's say the preliminary approval rate is 80% and a taxpayer applied to make a gift of $10,000. That would make them eligible for a maximum state tax credit of $2,000. With a preliminary approval of 80% of the gift, or $8,000, the credit would be 20% of $8,000, or $1,600. Now, that said, not everyone who applies to make an Endow Kentucky gift ultimately will. There's no obligation. You're not obligated to make this gift just by submitting an application. Certainly, this is such a popular and oversubscribed program that only people who are really seriously intending to make this kind of gift should submit an application. But circumstances change. Sometimes people decide not to participate, or they might decide to participate with a lesser gift than what they had originally applied for. So their portion of the credit is then restored to the pool, and that creates an opportunity for the Department of Revenue to reallocate that amount among the donors who made their full gift, full amount of the gift that they applied for, not the amount that they were preliminarily approved for. So let's go back to our example of $10,000. So the taxpayer wanted to make a $10,000 gift. The preliminary approval was for $8,000. If the donor went ahead and made the gift in the full amount, the $10,000, and there's a reallocation of 5%, the approved gift amount would increase to $8,500, and the credit would be bumped up to $1,700. And I used 5% just to be conservative and not to create unrealistic expectations, but the reallocation, it's not required, it's not promised, but it is something that's happened pretty much every year, and it is usually much higher than 5%. Many years, it's great enough that it gets donors really up to or right at 100% of what they applied for. And there's no guarantee on that. Who knows, there may be a year where there is no reallocation. It again, just all depends on how many people apply for the state tax credit and make their gift. But when they do the allocation, it's usually pretty substantial. So that means, I just say that so that you all realize that the decision to make the gift in the amount that's been preliminarily approved or in the full amount really can have consequences. So everything we've talked about. Oh, you're laughing, Heather. Is there another question?
There is another question. I think this is a good time for me to answer it too. And you have answered this in this last section, but I just want to specifically answer the question. And that is, what percentage of people who submit an application get a credit? And the answer is everyone who, without guaranteeing anything, everyone who gets us an application before July 1st will get some credit. So everyone who gets us that application on time is gonna get a credit. But the point that Jennifer's making with this pro rata discussion is that the gift that you write down on your application, you may not be approved for that total amount of the gift that you want to make. Let's say you write down $50,000 on that application, you may not get approved for a $50,000 gift. The credit will always be 20% of your gift. It's just that what the state does, instead of saying, we're only going to approve the first 100 applications we get, what the state does is they gather all the applications they get and they say, how much money did people apply for? And then they just prorate the amount of credits available to everyone who applied essentially on time, who applied by the deadline. So if you applied for $50,000, chances are you're going to get approved for something like 45,000 or 40,000. We have seen years in the past where the approval rate was as low as 60%. Meaning, your gift of 50,000 that you hope to make gets chopped down to 35,000. We've seen it, like Jennifer said last year, where you apply for 50,000 and you get approved for 48,000. So it's hard to know how many people will apply and how much they'll have to reduce your gift by. But the credit is always 20% of your gift. It's just that the gift amount you write down may be reduced in that approval letter. And unfortunately, we won't find out how much they have to reduce your gift until you get that approval letter in mid-July.
Yeah, but it's across the board. So yeah, you'll receive the same percentage that everybody else does. And you know, we have found a word about this program and how it's administered. We have found it to be just so well administered, prompt, fair. Our contact at the Department of Revenue is so responsive and helpful. They do a great job with this program, even given that this program really just has so many built-in deadlines and requirements, and it's very well administered. So, okay, is there another one? Tax exempt.
I think I'll go over, I'm keeping track of the other questions that are kind of one-offs, and we'll go over those, I think, in a minute.
All right, well, let's look at it in this timeline format because we talk about all of these deadlines and how important they are. So, okay, prior to June 29th, we're going to be sending out information. You're going to receive your application. Call us with any questions. We're going to set up any fund that you would like to create. We're going to get that in order. And then by June 29th, 2021, if you'll submit your application to the Community Foundation, we can troubleshoot. We can make sure it has all the required information. We can make sure that anyone who said they wanted to participate, but we haven't received an application, we can follow up and say, did we miss it, or you changed your mind, that sort of thing. So that way it helps keep track of everything. Now, taxpayers can send their application directly to the Department of Revenue. Absolutely. Just know that if there are deficiencies, it won't be accepted. So all of the applications that we receive by June 29th, we then submit to the Kentucky Department of Revenue on July 1st. And they are all counted as having been received on the first day. I think the Department of Revenue is so inundated with applications that first week, they even count the ones that come in anytime during that week as being received on the first day, because they just can't process as many as that come in. Then our third bullet point there, by mid-July, usually the preliminary approval letters are out. And from the date of that letter, each taxpayer has 30 days to make their gift to the Community Foundation. And remember, by signing that second signature line on the application, the Department of Revenue will share with us the date of your preliminary approval letter, and we can help keep up with when that timeline is ticking, when that 30 days is ticking. Within 10 days of receiving your gift, we provide proof to the Department of Revenue that you made the gift that you applied to and were approved to make. And that is via a form called the Schedule Endow. The Department of Revenue then signs off on the Schedule Endow and sends it back to the taxpayer. And that's what you use when you file your taxes. If there's a reallocation and you're actually given a greater amount of state tax credit, the department will issue a second Endow Kentucky or Schedule Endow form, and you'll provide both of those to your accountant, or you'll provide both of those when you do your taxes. So that's the general timeline of what you have to do. And I think that wraps up what I have, Heather. I think we have a page there with some resources. The Department of Revenue, like I said, they're great. If you have questions you want to ask them, please contact them. They're great. You can contact us. My contact information is on there, or Heather, and we can take whatever questions you have.
Thanks, Jennifer. I'm just going to quickly, we've had a couple more questions come in through the chat box that I just want to tick off really quick. Someone asked about how many community foundations in Kentucky qualify. I mentioned earlier there are about 9 or so qualified community foundations in Kentucky. As far as I know, they all market this to their fund holders or their donors or their communities. But if you have a specific question about a particular community foundation, I would recommend going to their website. Most foundations that participate in this have something about it on their website, but there's about 9 across Kentucky.
And if I can, I'll interject there, Heather. We all sit, we each have representatives on the Endow Kentucky Commission. And so the community foundations really work together to make sure this program is well utilized and work together to make sure that the credits are distributed each year. So it's a good partnership.
Excuse me. Someone asked about doing this every year. Absolutely. We have fund holders who participate in this every year at the full $50,000 amount. Most of the time, their gift is reduced a little bit because it's prorated. So you're not guaranteed to get that $10,000 credit every year, but you can certainly apply for the full amount every year, cross your fingers, hope for the best. And, you know, if you don't need that full credit in a year, you can always carry it forward. But we definitely have donors who participate and apply and make a gift every year. We had a question about how the funds at the Community Foundation distribute money out, and the spending policy. At the Community Foundation of Louisville, our spending policy for permanently endowed fund allocates 5% of the total fund balance every year for grants to nonprofits and our administrative fee. So that is how distributions are calculated from permanent endowment funds at the Community Foundation of Louisville. We had a question about nonprofits establishing funds at the Community Foundation to take advantage of this. And that slide that Jennifer showed earlier with the list of designated funds is a great example of that. Many of those funds have been started by individual fund holders, individual donors. Some of the funds have been started by nonprofits. The only thing to keep in mind is if you're a nonprofit starting a fund like this, you have to have $25,000 to start it. You have to have a donor, essentially, willing to start the fund for you, because you can't, we're not able to start funds for zero. So if you're a nonprofit wanting to kind of take advantage of this, you just have to make sure you have a donor ready to kind of seed the fund for you. And yes, the donations to be eligible for Endow Kentucky, the donations have to be made within that 30-day window, and you have to apply ahead of time. So it's a very specific process that applies to anybody who wants to make a gift. We would be happy to share these slides out to people who have registered. So just stay tuned for an email about that. I can get the slides shared. Let's see. Yes, tax credits do carry forward for 5 years. I've already mentioned that.
QCD.
Yeah, you want to take the QCD question?
Sure. Yeah, there's a question in here that says someone understood that the qualified charitable distributions from IRAs could not go to donor advised funds. True. So that's one of those extra requirements and restrictions on a QCD gift versus a stock or a check gift. The qualified charitable distributions, the point of those from your IRA, and I should reiterate our disclaimer, for all tax matters, seek the professional guidance of your accountant or your CPA. But for QCDs, the point of them is that you are making, you're making this charitable distribution from your IRA. You're never declaring it as income because it's going straight to the charity. And so there's no deduction in order. So if you use a QCD for an Endow Kentucky gift, you would still get the state tax credit, but you would not receive any deduction. And you could not direct that gift to a donor advised fund. It could go to a designated fund, a field of interest fund, a fund for Louisville, scholarship fund, but it could not go to a donor advised fund. So you're exactly right.
Great question. We had another question about if you can support multiple different endowment funds with your Endow Kentucky gift. And we have, yes, the answer is yes. We have a lot of fund holders who do that. They apply for the $50,000 gift, and the plan is for them to do half to, a fund that supports their church and half to the fund for Louisville. And then when we receive their gift, we just deposit half into whichever funds, or, we've even had people do a third, a third, a third with 3 different funds. So you can divide up your gift in that way. And we have a lot of fund holders who do that. There's a question about a study about how much money gets allocated to rural Kentucky with this. It's a great question. And my guess is the Revenue Department probably has some information on this. What the Revenue Department keeps track of every year is how many gifts are made to the different community foundations across Kentucky. And like Jennifer said, there is an Endow Kentucky Commission that all the community foundations are a part of, and we talk about the impact from this program and ways we could, carry out the intentions even more. But I don't know of a particular study like that. Jennifer, do you?
I don't know of a study. I mean, as you might expect, a large percentage of the Endow Kentucky dollars are awarded to Lexington and Louisville community foundations. But that said, you can always create a fund with us, and some people have done this, that benefits someplace out in the state. I know one in particular I'm thinking of, I think it benefits a church in Eastern Kentucky, and it's an Endow Kentucky fund. The people that started it send their Endow Kentucky gift to it every year, and so that distribution goes to that Eastern Kentucky church every year. So, you know, we can help with the effort on our end that way. But yes, the other community foundations also can receive these Endow Kentucky applications and create these funds as well. I wish there were a study at this point, but I don't think there is.
We had another question about if someone is interested in starting starting a fund for an organization that they're passionate about, is there a way for them to know if there's already a fund that exists here? And I think, you know, the answer is, for the most part, yes. I suppose it's possible that a fund holder would create a fund that they kind of wanted to keep anonymous, or they wanted to not share publicly, which is certainly the case, and we would honor that. But otherwise, if you're interested in starting a fund, let's say for, you know, St. John's Homeless Shelter, and you want to know, does one already exist? We would certainly let you know whether it does or doesn't, assuming we're not violating any other requests that a donor has made of us. So I think if you're interested in knowing about a particular organization and whether they have a fund, just call Jennifer or I, and we'd be happy to answer that as best as we can. The 5 states that have this kind of program, let's see, there's Montana. I actually just researched this not too long ago. If I still have my paper, I may have to do it by memory. It was like Montana. It was Montana. No neighboring states, interestingly enough. Nobody really around us. Montana, Michigan, I think. Jennifer, do you remember?
It's been a while since I've looked at it.
We
could get that to you.
Iowa was definitely one. Yes, Iowa, I see. I just did a little report for our staff on this, and I'm blanking on the others. But whoever asked that question, I will email. If we have your email address, I will email it to you. If we don't, shoot me a quick email, because I have those. I know I have them somewhere, and it's nobody near us. Indiana doesn't, Tennessee doesn't, none of our neighboring states do. It's sort of a random kind of group. Well, these were great questions, really engaging, everyone. We'll give it a few more minutes. If anybody wants to unmute and ask a question, happy to do that as well. But we've had a lot of participation with the chat box too. Let's see. All right, well, like Jennifer said, you can send us an email either directly or does someone have their hand raised? Do you want to go ahead and ask a question?
You have to, oh, hello. This is Janet Denial. So I came in late, so I might have missed this, but for organizations that have established endowments, the list of samples that you gave, do the donations to those organizations have to be made in this 30-day window? Or can they be, okay.
Yeah,
so
they do.
So it's a campaign that each organization probably makes to select donors, that if you want this credit, you have to make it between, every year. Yeah. But you don't have to apply every year you do have to apply every year.
Yeah.
Okay, so the organization has to apply every year, and every year they have to have 30 days to get their donors to make the money, to contribute the money.
It's not the organization, it's every individual donor who wants to make a gift has to submit their own application.
Okay, so if I want to give to Home of the Innocents, they have the fund, but I still need to apply every year.
Yes, if Home of the Innocents has a permanent endowment fund.
Well, it was on your list. It was on your list.
Then yes. Yes, you have to submit an application before July 1st. You write down, on the application that you're giving to the Home of the Innocents Endowment Fund. And that whole process applies to every single solitary gift that anybody wants to make.
Okay, that's what I didn't understand. I didn't know if once you had established the endowment fund, whether the app had to happen every year or whether it was just the money had to be contributed in the window every year. But I get it now. Thank you. Sorry
Sure.
for being late.
No, that is a great question. And actually it brings up something that we should clarify. The funds that are listed that we showed you the list of, those are funds that were specifically created to receive donations from third-party donors, not from the agencies themselves, the nonprofit agencies themselves. There may be nonprofit agencies that have agency endowment funds, but that is separate from a fund that can receive gifts from third parties. And that is all that Endow Kentucky donors can do. They are a third party giving a gift to whichever fund they choose, but it's not the agency endowment fund. It's a fund that's been created to receive third-party donations that will ultimately benefit that agency. So there's a bit of a separation there. Is that clear as mud, or did that make sense?
I think that's good.
I think it's clear as mud.
Well, and I think, I was
Go
just
ahead.
going to say, we've been doing this for 11 years now, and even though there is a process and it seems a little bit complicated, we've sort of worked out all the kinks, and we try to make it as easy as we can for individuals who are supporting their own permanent endowment fund, as well as individuals who want to support a designated fund that exists here for the benefit of a specific nonprofit. So we're happy to, answer any other questions offline that you may have. We try to make this process as easy as we can. We do a lot of reminders leading up to any deadlines, including reminders during the 30 days when you have to make your gift. We've great people at the Revenue Department who we're in close contact with. So, because even though it does seem complicated, we try to make it as easy as possible for fund holders. And I think we have people who have been doing this every year for 11 years, and they just are so appreciative of the ability to make a gift that will last hopefully forever and ever to support philanthropy in Kentucky. And so even though it may seem complicated, we really try to make the process as easy as we can. And I think we have a pretty good track record of doing that. So if there are no other questions, I want to thank you all again for joining us today. What a great turnout. Like Jennifer said, I hope that someday soon in the near future, we'll be able to do another informational session in person and see and touch real faces. But otherwise, I hope you all have a great afternoon. I will send an email out with a PDF of these slides in case that helps. The session will be posted probably in our next e-news or another venue. So stay tuned if you missed part of the presentation and you want to go back and review it. But otherwise, feel free to contact Jennifer or I if you have any other questions about this tax credit.
Sounds good. Thank you all for being here.
Thank you all.
Bye-bye.